Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back, everybody. Today, I want to teach you about one of the strategies that takes me from a broke trader to make thousands. Actually, if you have been watching me for some time, you realize that I have this thing here. Watch this thing. Have you seen this thing? This is a chart that I look on some time ago, about 5 years ago, 5 to 6 years ago, where I started trading this particular strategy. When I started trading, I learned a lot of strategies. I learned a lot of concepts. I read books. I watched a lot of YouTube videos, as you're also watching here right now, right? Yes. So I wanted to find a way to trade the market to become successful. So whilst through my journey of searching for strategies and learning, I came across this book called The Secret of Pivot Boss, and I read the book. So I read the book thoroughly, and I came across a concept called initial balance concept. Initial balance concept. So this initial balance concept stated that for every first hour of every chart, either crypto, forex, stocks, or indices, or metals, for every first hour, the market is going to range for the first hour. Every first hour, the market is going to range for some time. Then when the market breaks out of the first hour consolidation, the direction the market takes is likely the market is going to go in the same direction. It's like that's the concept. So I grasped this concept and I got interested. I said, okay, then let me find out more about the initial balance concept. You know, strategies are developed with concept. You must first learn a concept, then you develop your strategies around the concept. So when I learned the initial balance concept, I said, okay, let me see how I can apply it. So I also opened my Forex chart and I realized that you cannot trade the strategy on H1, you cannot trade it on M15, but you can trade it on M5, because if you're trading the first 1 hour of every chart, then if you trade the H1, you're going to get only one candle, right? Which means you cannot see the consolidation. If you're trading the M15, you can also see much consolidation because you're going to get only 4 candles, right? So, which means the best time frame to trade this initial balance concept is the M5, which is the 5-minute time frame. So I decided to apply this strategy in the Forex chart. So I opened my 5-minute chart and I started applying it. So I realized that I was becoming profitable slowly. So if you can see this chart, I'll show it to you later. I'll remove it. Okay, it's a chart. I'll remove it later. It's how I tested the strategy from just $30. I tested it with just $30, and I grew the account to 2,000. I'll just show you. It's on my chart. So I don't know if you have been watching me for some time. You will realize that that yellow thing is still there. I decided not to remove it because that is my base, guys. I feel like crying now, but I don't want to cry here on YouTube, okay? That's my base. That's where I started from. That is when I started trading. That was why I started, guys. I was broke. I was to the last level. This is a strategy that picked me up. That's why I never removed that chart on my screen. Yes, and that particular computer screen, I decided to make them that computer screen right now is not working. Yes, it's not working. It's malfunctioned. But I decided to still keep it there and keep that chart there because of that is my root. That is where I came from. That is how I developed myself as a trader. So I don't want to cut my root off. So that's why it's still there. I'm going to explain to you. I'm going to show it to you later, but let's focus on the concept. So the concept says that the first 1 hour of every chart, the market is going to range. Okay, so you open your 5-minute chart and then you find this first 1 hour of every opening chart. So let's see. I started trading this strategy on the only Euro USD. Only Euro USD. Why? Because I realized that the Euro USD, I loved it. I just love Euro USD. And moreover, I realized that the spread was very tight, which means if I'm trading on the 5 minutes, I'm not going to get a bigger spread, right? I'm going to get a very tight spread. Because of that, I trade only this strategy on Euro USD chart every day. So let me show you the chart and let's see the concept in raw charts. So this concept states that you have to open your chart and then the opening bell, okay, the opening, which means when the chart begins, and per my local time frame, my opening bell is 12 midnight. That is my local time frame, which means that when I open my chart every 12 midnight, I must see this opening bell. So you can see that on the chart, sometimes you can see period separators, sometimes you can't see period separators. But you can see that on my MT5 chart, I have period separators on the line. I have period separators on the line because I decided to do it for it to appear on my chart. If you don't have yours on your chart, it means that you have not set it up for it to appear. So first, go to MT5, you right click, you go to properties, and then you go to show period separators. When you click, it will come, and then you show period separators. That's the first rule because you are trading on the M5 time frame, which means the chart is going to be a little bigger. If you don't show the period separator, you cannot see it well. So you show period separators, which shows where the chart began every single day, everywhere the chart began. So this chart is supposed to be traded only on Tuesday, Wednesday, Thursday, and Fridays, no Mondays, okay? Because on the Monday, the weekend is now building up, so we can't get proper initial balance. So the concept says that when you wake up every morning or every time the market opens, per your local time, you search for the first 12 candles, the first 12 candles. So you count the first 12 candles on the 5 minute chart, because 12 candles, if you want 1 hour of trading hours, which means it's going to be 5 minutes chart, how many candles? 12 candles, because 5 times 12 is what? 60, which is 1 hour, right? So the first 1 hour, the market is going to consolidate, and when the market breaks out of consolidation, now you take the trade. That's what the concept says. So I did a lot of testing before I started doing this strategy. So let's see real example for the chart. You can see that here is Tuesday, and on the Tuesday, you can see that when you count the first 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. These are the first 12 candlesticks. Have you seen? That's the first 12 candlesticks. So you draw your box around the candlesticks. That's the consolidation zone. Now, when the market breaks out of the consolidation zone, then you take your trade. You can take your trade in two ways. One, when two candles close above the box, either above or below, you can be selling or you can be buying. When two candles close above or below the box, you can enter your sell, you can enter your buy immediately. Two, when the market also retraces back to the zone, you can also enter or buy immediately if the market has not gone that far. That's the rule. So the rule says what? Identify the first 12 candles. Then when you identify the first 12 candles, what do? You now search for the consolidation area. You draw your rectangular tool around the consolidation area. Then after that, you wait for the market to break out of the zone or retrace back to the zone. So let's example here. On this example, you can see that the market broke out with a very strong candle. So we could not enter immediately after the first two candles because the second candle is here. This is the second candle, guys. Are you going to enter all the way at the top there? You can't do that. Because of that, you have to wait for the market to retrace. But at this particular zone, you would have waited and the market wouldn't have retraced. You waited and the market wouldn't have retraced. Why? Because you see that it was supposed to retrace around this zone, but the market could not come and decide to go up. Because of that, when the market comes back, you may decide not to take the trade because it's very risky to take the trade. But let's see the next day, which means every day you trade only the opening bell and you're out of the market. So you see that though the market came back to the zone, it also went up again. But as I said, it has gone up too much. Because of that, you cannot just take a trade, it's a risky trade. But just to demonstrate for you to see. But like I said, the next day, the opening bell, this is my chart. Can you see the previous separator? So let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the range, the opening bell range. That's the initial balance range, right? That's the initial balance. So when the market breaks out, this first two candles that break out of the zone, right? And what is the first candle? Candlestick number 1, candlestick number 2, which means we enter our buy immediately the market breaks. Two candles close outside the box. Two candles. When two candles close outside the box, we enter our buy or enter our sell. So two candles close, first candle, second candle, we enter our sell or buy, and then our stop loss. Always think of your stop loss first. Don't think of profit target first. As a newbie, you might be tempted to think of profit target first. No, think of stop loss first. Ask yourself, how much am I willing to lose? What is the best place for me to set my stop loss? Then when you tell me your stop loss, now you can now set your profit target. So your stop loss should be somewhere. If the range is very small. Sometimes the range can be very bigger. If the range is very small, then your stop loss should be behind the box. If the range is very big, your stop loss can be maybe 3/4, which is not that far away. You see example here, okay? But just showing you that the stop loss must be set before thinking of profit target. This initial balance concept, let me explain to you once and for all. You can get three variations. We have one variation where the range is very smaller range, which means it moves smaller range. And also we have the average. The average means the box is a little average, not really big, not really small. And you have the one that the box is very big. You don't do that. When the box is very big, you don't trade, okay? Trade only the smaller one and the average one. So let's move on. So you put your stop loss at a good position and you take a profit target 1:2 and you're out of the market. Always take profit target of what? 1:2. Don't take 1:1 millions. Don't take 1:1,000. Don't take 1:1. Or don't take something less than 1. Don't be shaking. Always make sure that when you enter the trade, you take 1:2, you're out of the market. Don't be shaking. Be patient for your profit target to be raised, okay? So which means if you are risking $50, you are taking what? $100 profit, right? If you are risking $100, you are taking $200 profit. If your account is very big, you are a road trader and you have huge capital in your account, and you can raise $500. Then when you raise $500, you are taking $1,000. But I know most of you guys who are watching me are beginner traders, so you might not have that huge capital like $10,000 in your account, or maybe $20,000 in your account, which means you cannot raise $500, right? You can't do that. You can't do that. Because of that, you can raise maybe $100, or you can raise $50. Let's say for the average guy, $50. So when you raise $50, you gain $100. So always stop loss of profit target of 1:2. Okay, that's a risk reward. So you see, that's the first day. The second day, let's see. So we won't trade again after we enter the trade. We won't trade again until we wait for the second day. The second day, you wake up early in the morning, the same thing. You count the first 12 candles for the opening bell. So let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the first range. Can you see? This is the first range. So we are buying when? What are the rules? You only buy when 2 candles close above the box. 2 candles close above the box or below the box. Then you enter your buy or sell. Or you wait for the market to retrace back to the box. Sometimes when the candle still close, it will be far away from the box. So when you enter there, though you might have a winning trade, but it's likely the market can come back, take you out and continue. But always wait for the market to come back to at least a good point. So if the 2 candles close and the chart is a little far from the box, don't enter the trade. But if it's still close at that, you can set a very good stop loss, then you enter. So you can see that after the 12 candles, now the first candle that's close above was this one, this big one. The second candle is this short one. So you enter your buy immediately. Your stop loss should be where? This is a medium box, right? Which means stop loss should be somewhere 3/4. So not too far. Here is too far. At least somewhere here is better. And then your profit target 1:2, and you're out of the market. This concept works most of the time. It works most of the time. So you see that the same thing we set for here, the same next day, we found the same thing. Let's move on to the next day again. Good. So the following day, let's see the same initial balance concept. Let's count the first 12 candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So the first 12 candles, which is the consolidation zone. Now, when the market 2 candles close above, so where is the 2 candles that close above? Let me zoom into well so that I can see it well. Good. 2 candles closing above. So the first candle that closed above was this candle. Can you see, guys? Are you watching? The second candle was this candle. So we draw, we wait, we can buy here, or we can wait for market to come back a little. So far as 2 candles have closed, our strategy is ready. So we can now enter at a good position. So you can see that we could have entered somewhere here. For this is the first candle, second candle, we could have entered somewhere here. Because the market came there a little. And then our stop loss, a very good place. And I take profit target 1:2. But look at something here. In this scenario, we would have had a losing trade, because though our stop loss was at a good place, because the market will come back here and take us out, because the market could not reach our profit target. I'm not sure this one reached 1:2. Let me see. Assuming here is 55 points, which is 5.5 pip, right? Let me see. Can we get 100? Oh yes, we would have had a winning trade. Okay, sorry, we would have had a winning trade because we got 100, which means this candle. Can you see this candle? This candle would have made us been out of the market. So we would have been out of market here at this zone. We would have been out of the market. So it would have been a winning trade. So just get the concept and let's move on. So the next day, let's see another example. The next day, so you see, every single day you get some of these strategies because that's the opening bell. Every single day the market opens. So you start searching for it. Okay. The next day, opening bell. You are searching for what? The consolidation zone. On M5 candle. So you see that the next day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the zone. And what is the candle that broke out? This is the candle that broke out, the second candle. So now we can enter while the second candle breaks out. So we put our buy order here. second candle, and our stop. This is actually one of the smallest blocks, right? I told you that we have three variations: smaller consolidation range, medium, and the bigger one. We don't do the bigger one because of the stop loss. Sometimes the market can also be choppy. If it's bigger, it means if the initial balance is bigger, the market is going to be more choppy. Okay, because of that, I don't treat the bigger box. I don't always treat the smaller one and the medium one. So you put your buy order there, your stop loss behind a very good structure or a good place. Your profit target 182, and you're out of the market. Can you see? Trading this strategy is very easy because if you know what you're doing, then you can get a very high win rate. Definitely, you will not get all of them to be win, no. But at a zone, sometimes the market can be very rough, especially when it's around August, September. The market can be very rough, so you can get at least, but at least in if nothing, you get at least 50 of them to be wins, 50 of them to be lost. That's my average. Always, I don't care if I'm going to make 70% win rate, I'm going to make 80% win rate, or I'm going to make 40% win rate. I don't care. All what I care is at least on the average, I'm getting what 50% win rate with risk reward of 1 to 2. Definitely, I'm going to be profitable because if you are taking 100 to make 200, 100 to make 200, 100 to make 200. Definitely, if you have half of them to be wins, you're going to be profitable. Do your calculation. Take your phone and do your calculation and you see what I'm talking about. So let's move on and see some examples so that we just wrap up this video. So the next day, which is now, I think it's Friday now. So the next day, and now you see that you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So here, you can see it here. This is the first 12 candles. Good. And this is a sell. All the ones you've been taking, it has been buy, right? This is a sell scenario. You can see that the market broke. See, the market broke the zone and then came back. See, so we are buying when it comes back, or the first two candles that break out of the zone. So you can see that the first two candles, 1, 2. Now the first two candles broke out. So you can enter your sell here, your stop loss at a good position, and a profit target of 1/2, and we are out of the market. Guys, can you see 1/2 out of the market? So if you enter here and your stop loss is here, your profit target is going to be down there. Can you see? This is very simple strategy. It's simple, but it made me thousands. Let's see if the week has ended. Let me clean this. Okay, I think now it's Friday. Because if the week ends, per my chart, I'll see double lines, which shows me that the week has ended. So I think it's Friday now. This is Friday, so let's count the same strategy. How many are we counting? 12. So let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we count our 12 candles, and the candle that breaks out, we enter our buy there. So this is the first candle that breaks out, second candle that close. So two candles must close up outside, okay? Two candles must close outside before you take the trade, or if two candles close and it's too far, wait for the market to retrace a little before you take the trade. So two candles here, and then your stop loss behind the pattern, and you take profit of 1/2. You're out of the market. Let me clean these ones. These are the old ones we did. You're out of the market. Take profit of 1/2. You're out of the market. See, very, very simple but powerful strategy. And nobody knows. Have you heard people talking about initial balance? No. Because these are concepts you can only find in books when you read books. That's why I tell you that don't be watching YouTube videos if you become profitable. Read books. You can get concepts. So I developed this concept myself. This is a strategy I developed myself. The concept was there. I developed my own strategy and went to trade it myself. That was when I began trading. So you can see that your stop loss will be here, and your profit target will be what? 1/2, and you are out of the market. That's all simple. Can you see? Even throughout this whole week, you've gotten a winning trade. Can you see? Throughout this whole week, I'm not saying I'm going to get a winning trade every time. Don't put in your mind like that. But see all the charts we see. Look at continuous. This one, I'm not sorting out the days that it got winning trades. I'm showing you step by step every single day, right? You see that we go to the chart singly every single day. When the market opens, we try. When the market opens, we try. And you can see that you are going to get a lot of winning trades. Just try on the chart, and you can see. So just put your mind, okay, I'm looking for half of them to be correct, half of them to be wrong. With risk reward of 1/2, you're definitely going to be profitable. But you can see that I'm using only green candles. Why am I using only green candles? Is because this strategy, I don't want to get confused. Because of that, I don't trade the red and the black candle. No, I don't care. All what I care is the range. So I use only one candle. So if you also want to test the same thing, or you want to trade the same thing, you must what? Use only one candle, maybe green chart, or white chart, all red, so that it won't confuse you. Okay, don't be mixing red with the green for this particular strategy, so that it won't confuse you. If it's green, if it's red, all red, if it's black, all black. Okay, so You can see that it's very powerful. And this is a new weekend. Good. See, let's see here too. You can see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the first zone. This is the first consolidation zone. So we are entering when market breaks out, right? So first break, second break. Are you going to buy here? Guys, will you buy here at this zone? Will you buy here? You can't buy here because it's too far away. If you buy here, if you rush and buy, then where will be your stop loss? You can't buy. You have to wait for the market to retrace to a good zone. So you wait for the market to retrace a little back to the zone somewhere here. You see the market retrace a little. Yes, and there's even a morning star pattern there. There's a morning star pattern here, and then so you enter your buy, immediately you see a nice pattern or something. Your stop loss somewhere good, and your profit target 182, and out of the market. Very, very simple strategy. So let me show you this. Let me show you my chart. Why I say this chart, I will never remove it, because that's my base, guys. That's my base. That's why I started live from. So let me show you. Today, you people are letting me take it. I don't want to take it out. I want it to be there. You people are letting me take it out. Eh? Okay, for the love of you guys, let me just show it to you here. So I don't know if the camera can see it. The camera can see it. You can see that this initial blind trading system, and you can see the first year when I was testing it, after I did the demo testing, back testing, when I was testing it, I started with $30 in this particular strategy, because if you test any strategy, you must test it small to see if it's working before now you start depositing huge money or you start growing the account. So with $30 for the first month, second month, and in it increased, I was able to grow it after 2 months. I was able to grow it to $60. Can you see? 2 months, I was able to grow it to $60. Then I started growing it. I started growing it too. So after about 6 months, I was at almost $1,000 with this particular strategy from $30 about 6 months. It's not the same day, guys. If this somebody who is saying the same day I'm taking $10 to $50, forget about the person. The person is telling lies. It's not the same day. From here it was about 6 months. Have you seen? About 6 months. So I was able to make it. Then the second year is what changed everything, because now my account was bigger in $1,000 for this particular same strategy, not just my overall account, but this was particular strategy that I was trading with that broker. So you can see that I was able to build it overall to the second year. I was able to build it to 7,000. Can you see? Because my account was now bigger, I can risk more. I was able to build it to 7,000. Can you see? So this chart, I will never forget it. That's why it's always here. I never forget my roots, guys. I'm not the guy one when they make it, they forgot their root. No, I'm not like that. So let me put it back, okay? This is my girlfriend. Test it before you start trading it, okay? I think that will be all for this video. This is Owas, your mentor. See you next time.